This is not financial advice, this is not legal advice, this is for entertainment and educational purposes only. And everything I say is my opinion. Please do not make any financial decision based on anything I put in these videos. That being said, hit the like button, the subscribe button, all that YouTube algorithm stuff, so you'll be up on the videos as I put them out. What I'm going to show you today, I'm not telling you to do this, I'm just telling you what I'm doing, what I'm personally doing in order to buy AMC shares for free while waiting on the MOAS. Okay, I'm just telling you what I'm doing. Okay, it's called the wheel strategy, and the wheel strategy gives you the opportunity to make premiums without actually owning any shares at first. Okay, you have the opportunity to own shares, to have control of shares and make some money every week without actually owning the shares at first. Okay, and you go on YouTube and Google wheel strategy and you'll see a lot of videos on it. And you know, you got the Greeks and you got all these other things that come into play. But the way that I'm doing it, the Greeks don't really come into play because I'm doing it as a weekly play in order to make premiums to invest in AMC and GME shares. Okay? But I'm not telling you to do this. I am not telling you to do this. I'm just telling you what I'm doing. I'm just telling you what I'm doing, and I'm gonna break it down in the most simplest form that I can think of. So please do not do this because I'm doing it. I'm just telling you what I'm doing it. Please research it. Go look at other YouTube channels on the wheel strategy, and then you can make your own decision. I'm just telling you what I'm doing it, and I'm gonna break it down as simple as possible. I don't want to complicate it. I'm just gonna make it as simple as possible. Okay? The wheel strategy, you start off by selling a put, and if it's exercised, then you would sell a call, and if that's exercised, then you would start the whole process all over again. Now, you can use any stock. I do it with a few different stocks, but I picked Riot because Riot is currently trading at $4.57, and the 52-week high is $42.09. So we're talking a stock with a lot of potential to get back to its all-time highs. Okay? But the way the wheel strategy worked, the way I started off, I would sell a put at the $5 strike price. Now you have to remember, these numbers and these dates, everything changes depending on how the market is moving. But as of today, right now, June 17th in the morning, it's about 7:30. Riot is currently trading at $4.57, and a $5 strike price at a June 24th expiration date pays a premium of $70. Now let me explain what the strike price is. You can buy a $5 strike price, $6 strike price, $7 strike price. You got to go into whatever broker app you're working with, Fidelity, Webull, Moomoo, TD, Ameritrade, Fidelity, whatever you're doing. You go into the options chain and you're gonna look up Riot. You're gonna look for the June 24th expiration date, and then you're gonna look for puts. And what you're gonna do, you're gonna sell a put. And currently, based on what I looked at, a $5 strike price when you sell a put with a June 24th expiration date is going to pay you a premium of $70. So you get that $70 right away the minute that the put is sold. You get that $70 in your buying pressure right away. You have that $70 to buy. Let's say you want to buy. If AMC is currently trading at $12, you're not able to buy 6.8 shares of AMC shares for absolutely free because you didn't pay anything for it. Now, with puts, each contract is 100 shares. So if you're doing a $5 strike price, they're gonna freeze $500 in your account. So that's $5 strike price times 100 shares would be $500, and they're gonna freeze in your account in case on June 24th the put is exercised. If the put is exercised, then you have to buy 100 shares of Riot at $5 a share. But here's why I think it's a great opportunity. First of all, the 52-week high of Riot is 42.09. So even if you buy it at $5 a share, even if you're forced to buy it at $5 a share, you're still buying it at a very, very steep discount in the current market. You're still buying a very steep discount in the current market. But if it never reaches that strike price, if it's never exercised, you get to keep that $70. And after June 24th, you can do it again with a strike price 1 week out. And then if it's not exercised, you can do it again. So you can keep making these premiums, and these premiums aren't always $70. They fluctuate depending on the market. But every week you can make free money doing not absolutely nothing, but all you got to do is just go into the option streams, look at what works for you, and then sell the put. You sell the put, and you keep the premium, and you can take the premium and buy AMC or GME shares, or you can do whatever you want with the premium, because the premium becomes available right away, right after it's sold. Now let's say that the contract is exercised, okay? If the sell put is exercised and you're forced to buy the shares at $5 a contract, $5 a share rather, now you have 100 shares of Riot in your account. Now what you do is you go back into the option chain, and instead of selling a put, what you're gonna do, you're gonna sell what we call a covered call. And you would do it a week out, or that's what I do. I do a week out when you sell the covered call. And as of today, right now, if you sell a call with the same $5 strike price with a July 1st expiration date, that is $38 premium. And that money is given to you right away. And at AMC currently selling at around $12 a share, you're able to pick up 3 additional shares of AMC absolutely free. So at this point, you've picked up about 9.5 shares of AMC absolutely free, doing absolutely nothing. And all they did was hold $500 in your account. They didn't spend the $500. All they did was hold the $500 as collateral in case the sell put is exercised. Okay? But the wheel strategy for me is the most simplest way to generate weekly income that you can use to invest in AMC shares, GME shares, or if you want to just leave it in there to keep growing your portfolio. You can do whatever you want with the premiums. But the wheel strategy is I think it's very, very simple. It's very, very simple. You sell a put, you pick the strike price, you get the premium, you pick the expiration date. And then if it's exercised, and if it's not exercised, you keep doing this every week, generating profits. But in the week that is exercised, in the week that they force you to buy the shares at whatever strike price you chose, the following week you sell a call at a strike price that works for you, you collect that premium, and then if it's exercised, you start doing it all over again. The wheel strategy, to me, is the easiest way to generate weekly income without too much risk. Anyway, hit the like button, subscribe. No, before that, please go online, look at other YouTubers, and learn about the wheel strategy. I kind of simplified it, and if you go to other YouTubers, they're gonna make it a little bit more complex. But to me, it doesn't have to be complex, because I think it's a simple, easy strategy to make money every week. Anyway, hit the like button, hit the subscribe button. I appreciate y'all on this journey with me. God bless. Have a great day.